Welcome to the Accendo Trading Group. This is our weekend wrap-up trading plan for March 27, 2010. Our website is blog.accendotrader.com, where we put together effective video technical knowledge trading plans on a daily basis. That's right, we believe in trading plans. They keep us focused, it keeps us disciplined, and lets us know what's coming down the market as we scan for new trades. More importantly, because we can cut down on our research time, we have time to spend with our family. So the week that was, well, all three major indexes in the up for the week, but as usual, the numbers do not tell us the full story. We had a very volatile week, especially on Thursday and Friday, where we were up 100 or up a lot, and then suddenly came all the way back down to zero. We only ended up with having 6 of our sectors ending in the positive, and that was led by consumer discretionary. And energy led us to the downside, and a lot of that, as far as the intersector going down, is because the dollar really showed some strength this week. And that strength of the dollar had a lot to do with some geopolitical events. We had Portugal had their debt downgraded. We also had some concerns about whether or not the EU was going to back Greece in its financial recovery. And eventually, at the end of the week, Germany kind of agreed to some potential recovery plans. So that ended up working out. But all of that caused the dollar to surge against the foreign currencies. And of course, we know that typically when the dollar surges, the market does retrace. So that had a little to do with what was going on the intraday, where we were up, and then the dollar would surge and we would come back down. The other thing is the economic data had little impact on the week. Even the GDP report, which came in at 5.6%, although it was predicted to be 5.9, so it came in just below, but we're still have positive growth, and that really didn't do much for the market on Friday. And the other thing that's important to note is that most of these intraday pullbacks are met with buyers. So this upcoming week, we have personal income spending on Monday, ADP on Wednesday, Thursday, the usual initial claims, and on Friday we do have non-farm payroll. But remember, the market is closed on Good Friday, so the market will not be open next Friday, but we do have the non-farm payroll, so you may see some anticipation on Thursday, or you may see some residual action all the way to Monday. But for this upcoming Monday, we have personal income and spending. Not to the importance as far as earnings. We do have Mosaic, which is in the agriculture sector, and we do have one split play that we're watching, CLB. When we go to look at the internals, a couple things we're going to notice is we basically had, middle of the road volume the whole week. Anything around 0.50 is even, so although these are red, we're close to 0.5. So the other thing that's interesting is on these 3 days, Wednesday, Thursday, and Friday, the thing that was interesting is that Wednesday, it was down 52, but it was down 100, and buyers came in. And Thursday, we only went up 5, but we were up 100, and we came all the way back. And then Friday, we were up, and we came all the way back down. So when you see that the breadth as a whole is sitting at the end of the week at these negative or close to positive numbers, you can see that a lot of it had to do with the day was at one extreme. Something happened intraday. We had the geopolitical concerns. We had the dollar surging. And so the day basically ended at par. But what I want to point out again is what I said earlier, is that no matter what, even with this down 52, we were down 100, the buyers come in. So the buyers, and this is my point, the buyers are still coming into the market. We still have stocks making new highs. Sure, not the 600 our number is getting smaller, but we still have stocks making new highs. So when in doubt, go long. Okay, so we're starting off the daily charts, and we're taking a look at the Dow Jones first. And the first you can see is, yes, we have clearly made a new swing high. Specifically, we are above the January highs, so we are at new high levels for 2010. When we get into monthly charts, we can scale it back and see where we are. Or actually, I can do it right now, and you can see it's great where we are. But remember, we're in a downtrend from 2007. But it's great as far as our March uptrend. So we clearly have made a new high, and that's great. Certainly inverted hammer right here, and the sort of doji-ish Kind here of concern or whether or not we're getting exhausted. But more importantly, a healthy pullback right now would be good for the market. We don't want to break the swing highs of January, so pulling back here to the 10 moving average would be absolutely fine. NASDAQ. We know that the NASDAQ has been leading us for the most part from the March ups and most of this move. And one thing we can see is that, you know, we had the inverted hammer and a doji on the Dow, and we can see some bearish candles here on the NASDAQ. So that certainly is a little concern. But again, a healthy pullback, pulling back to the 20 moving average here, still keeps us above the January swing high. So that's absolutely fine. S&P 500. The story remains the same. We have a little, looks like a resting of the market, which is certainly fine. Again, we can come down to this 1150 range, still stay above the January highs. Like the NASDAQ, that's putting us at the 20 moving average. Little pullback is certainly fine and will still allow for the bulls to remain controlled. Remember what we're looking at on the monthly chart as far as the psychological barrier for the S&P 500. So let's take a look at that psychological barrier. We're on the monthly charts, and that was the 50 moving average. And ta-da! That's where we are right now. As we line up with some of these swing highs and swing lows, you can see matching up right in here in this consolidation is basically where we found resistance at this 1175 on the S&P 500. But again, we can stay above the 50 moving average, which is again still that 1150 range. That will be a great boost for the market. And you can see what a great job we've done since the March lows of retracing this big push down. NASDAQ. Look at the strength of the NASDAQ. Absolutely great. Last week we talked about this range in here. We've closed above that. That's great. And now, I mean, realistically, 2,500 is probably our next target. This is certainly, this 2370, 2750 range is a good area of consolidation. If we can stay higher and come touch some of these swing highs here, that 2500 is our next target, and we're almost on the NASDAQ at those 07 highs. Let's finish off with the Dow Jones. And we once again can see that strength of above the 50 moving average right here. That's certainly great. And then when we match up to some of the previous swing highs, that's exactly where we are. Swing highs here. Swing lows right here, around 10,900. That's where we're finding resistance. Again, a healthy pullback, long as we stay above the 50 moving average, will be a great psychological boost for the bulls. I just want to say why I think we may have a healthy pullback, and that is, here we are with our linear regressions, and we're staying pretty much right along the middle, which is fine. But when I switch that over to our Bollinger Bands, you can see we're walking with the bands, and we're starting to pull back. If we pull back to the 20 moving average, which matches up with the January highs, that's totally fine. If we break that, we may touch the February lows. Moving on to the education portion of our video, we're using the book Trade Your Way to Financial Freedom by Dr. Van Tharp. And we're continuing on to talk about the legend of the Holy Grail. And last week we talked about the fact there are 1,000 trading systems out there. I sell some, Dave Elliott, First Wave sells some, Alex from the trading room sells some. We all sell some. And what's different, or the key to success, is that people have to be able to find a system that fits them. You can't just buy a system because it's profitable. As great as the track record is for Alex and some of the other ones, you still have to be able to trade it the way they did. So you still have to find a trading system that fits you. And Jack Swagger, who wrote Market Wizards, what he found is that the number one characteristic of all good traders was they found a methodology, they found a trading system that fits them. And so that is the first key part to the Holy Grail, is to understand you have to have a system that matches your risk tolerance, that matches your capital income. You have to find a system that fits you. And then he goes on to talk about, now this is some trading in the zone, Mark Douglas stuff here, that the other part of the Holy Grail is being able to accept that you're going to win some trades, you're going to lose some trades. And you have to be able to accept that. And until you can find that place as a trader that you can accept wins and losses, then you're not going to be able to succeed as a trader, because you're going to allow your emotions to get the better of you. So, as you guys know, we've got this great futures trading room for you, 10-day trial for $30, and you can see Monday, Tuesday, Wednesday, Thursday, Friday profit of this week. And I think it's important as we look at those numbers, and no, they're not 2,000, 3,000 a day, and we're using 3 contracts in this model, is that $250 a day is $5,000 a month. $500 a day is $10,000 a month. I don't know who can't live on that. Sure, we want more, but let's think about it. And remember, trading is like baseball: single, 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 and then you hit a home run. So if you're going to trade futures, we got a great futures broker. E-mini margin as low as $300. 20 free contracts if you sign up through us. A great trading platform, and we have a future trading plan that will help you jumpstart your trading. Again, we think that's the best leverage. Always trade at your own risk. Follow us on Twitter. Please donate so that we keep making these videos, and we'll get our podcast is actually going to be back up and running today. Thanks, guys, and I'll see you next time.